No one wants to build wealth and assets only to be sued later on and have those assets taken away from them. I have personally been sued twice as a landlord and active real estate investor back when I used to own properties myself. And we wanted to bring in an attorney to come and speak to you guys about this today because it is a topic of concern for a lot of real estate investors at the beginning, intermediate, and advanced levels. So we brought in Bishoy Habib. He is a real estate and business attorney with over 12 years legal practice representing real estate developers, investors, financial institutions, and he has done over 1,000 diverse transactions totaling over $12 billion. So Bishoy, welcome to the show and walk us through like a quick overview of some of the ways that real estate investors can protect their assets from lawsuits.
Yes, thanks for having me on the show. I appreciate you. And I always like to tell people as investors, there's a life cycle of investors. In the beginning, you're not really thinking about asset protection because you don't have assets to protect. As your portfolio grows and your net worth grows, it becomes super important to make sure that you're setting yourself up right from the beginning. Very first thing I tell everybody right off the bat, don't own investment real estate in your personal name. I think everybody pretty much knows that at this point. I still see a lot of people make that. It's a very rookie mistake.
Sure.
If you ask me now, so a lot of people put it in an LLC and that could work. My preferred method for holding real estate, and it's not going to work 100% for everybody, but generally speaking, is to put the property in a land trust. And the land trust serves several purposes. It's anonymous, so it keeps your name off the public record if it's set up properly. Of course, if you set it up yourself, you might screw it up and put your name on the record anyway. And it also has estate planning built into it in the sense that if you structure it correctly, whoever is supposed to get the property after you pass away gets it immediately without the need for probate, right? And probate's a long process that could take 9 months, a year, cost a lot of money. The key there is keeping your name off the record and keeping yourself anonymous, right? So we don't let people know how much we have in our bank account or how much we're worth. Why would we let them know how much real estate we own? And that's one of the key principles of owning your real estate in a land trust. It's completely private, it's completely anonymous. There's no filing requirements with the state, etc. That's really the first layer of protection. And so, you know, what you could do after that, depending on, I don't like to get too convoluted. So if you have one or two properties, that's probably a good enough start for you for the real estate side of things. Now, if you have a portfolio of 20 properties, you may want to then consider a second tier of insulation, if you will. And what we do then is we create a holding company. And the holding company, then we would structure it in a state that has charging order protections. Charging order protection is a very important principle. There are certain states that have it implied statutorily by law, no matter what. And then there are states that you have to actually put it in the operating agreement. So we would start it in a state that the courts honor charging order protection no matter what. And in short, what charging order protection means is that, let's say I sue Brian for XYZ negligence, right? And it's his LLC. If I win that lawsuit and he does not have charging order protection, I can then take his shares or force him to pay me. If there's charging order protection, or if we incorporate or file that LLC in a state with charging order protection, which is what you want, I could not do that. So I would be a creditor, but he doesn't have to pay me until he makes discretionary distributions to himself, which he then would never do because then we could find other ways that he could pull money out of that company without making a distribution. And so he's not doing anything illegal. He's abiding by the rules. He's abiding by the law. He's abiding by the court's judgment, but he doesn't have to pay me as a creditor. And what that does is it acts as a deterrent to creditors then who, if they find the corporate structure, first of all, they have to pay an attorney to see who owns this land trust. What's this LLC holding company? Who owns this holding company? Number one, that's not free. That takes time and money to find out. And number two, even if they do get to that point, any smart attorney will then realize it's like getting blood from a rock. They probably wouldn't pursue it unless it's an amazing case and it's a slam dunk case. And even still, what are they going to collect at that point, right? So those are some kind of high level tips on how you can protect your assets. And another tip I'll throw out there for the really advanced
Please do.
investors, if you have, we're going through the ranks here. If you have a large portfolio, let's say you have 20 properties, if you self-manage, my recommendation to you is you create your own separate third-party management company. Reason being, This also creates one more separation, layer of separation. So again, let's use Brian as an example. If he owns his own 20 properties and he manages them himself as Brian, Brian then, in the mind of the tenant and maybe in his actions, is the one that's responsible for what's going on. If Brian starts Property Holdings LLC and that company manages everything and the rent checks are being made to that company and all the tenant maintenance requests are being made to that company, and that company has clean books and it's not commingling funds, which we'll get to in a second, there is a layer of separation there that is going to protect everybody even further. And at the end of the day, guys, there's no such thing as bulletproof. I hate that word. Attorneys use it. There's no such thing. Nobody is fully immune from liability.
Yeah, it's a
But
marketing
what we
term.
do, it's a marketing term
Yeah.
and it's misleading. So don't believe it. It makes me cringe when people say it. All we do is we create barriers to prevent the frivolous lawsuits and the meritless lawsuits from coming after you. And so that's what we're doing by creating a separate management company, a separate entity to manage the properties. It's creating a layer of separation between you and the individual and the management. And the last point I want to touch on when we talk about asset protection, the number one way I could set you all up perfectly. Okay. I've been doing this for a while. I know what I have to do, but you could spend a lot of money and time and effort doing this right and still screw up. And you know how? Piercing the corporate veil. It's a very
Right.
important concept and it will subject you to personal liability if you don't treat the entities, whether it's a land trust, an LLC, a corporation, whatever, if you don't treat that entity with the respect of a real entity. The number one way that people pierce the corporate veil is through commingling funds. So this is my business credit card. I'm going to take yoga classes with it and I'm going to buy my breakfast, lunch, and dinner with it. And I'm going to go to the movies with it. And I'm going to do X, Y, and Z. These are not business related expenses. If things ever hit the fan and you get an attorney who's smart and they look into all this, they're going to say, Brian was spending all this money on his personal fill in the blank from a company credit card. And therefore he's treating the company as his personal piggy bank, Your Honor. Therefore, Brian should be liable for the liabilities of the company. That's piercing the corporate veil. You can do everything right, but if you pierce the corporate veil, you're still personally liable. So just be very careful not to do that.
So much good advice there. And we covered a ton of ground in a short period of time, which is exactly what I wanted to do. And you touched on a couple of things that I just want to highlight. One is anonymity is really important. If you don't want someone coming after you personally and naming you personally in the suit and coming after your personal assets and all that stuff, it really helps if no one can figure out who you are as the owner of that legal entity. So that's huge with land trusts. The holding company, that is great. I actually was not familiar with the notion of charging order protections. That is great. And I do have one follow-up question about that. What are some ways in which people who own an LLC that owns properties, that they can pull money out of that LLC, which don't count as distributions and don't trigger creditors being able to come after you and those assets?
Loans is a
Loans.
simple way.
Yeah,
You can have a management fee or a management expense. So it's not a distribution at that point. It's a fee that's being paid to the manager to manage the LLC. Those are the two big ways that we do it.
makes sense. Yeah, no, that makes perfect sense. Troy, in 30 seconds or less, how do you help people and how can people connect with you if they want to take you up on that help?
I'm an investor friendly real estate attorney. I'm based here in Florida. Anything with your real estate deals here in Florida. I work with investors, I work with lenders, builders, developers, everything related to real estate transactions. And the easiest way to reach me, if you're on social media, I'm Attorney Bishoy. That's my handle. So Attorney Bishoy. And if you're not on social media, my law firm's name is Levacy Legal. That's LEV like Victor, ACY, legal.com. And my email is Bishoy, Bishoy, at levacylegal.com.
Awesome. Bishoy, thank you so much for joining us today. And guys, if you enjoy these quick, hyper-focused conversations that we have, please rate and review the show. It makes a world of difference to us. And on that note, we'll catch you next time. Want the cash flow, appreciation, and tax benefits of real estate without becoming a landlord? You've heard of REITs and real estate crowdfunding, but you probably don't know much about 5 other ways to invest passively in real estate. So we put together a free video course for you to show you how to consistently earn 15% plus returns from 5 lesser known hands-off ways to invest in real estate. And even more importantly, we'll keep risk front and center in that whole discussion. Because really, what's the point of investing for high returns if you also take on high risk, right? So visit sparkrental.com/free to take our free course. Each video is snackable at 10 to 15 minutes long, and the entire course takes less time than watching a movie. Looking forward to chatting with you from within the course.